As we wrap up 2025, a standout year for the Victorian retail investments market, the JLL team are excited to provide a snapshot into the year that was and insights into the different retail subsectors.
2025 has seen the Victorian retail investment market move well beyond recovery mode, recording $2.4 billion in transactions as of December. With still some more deals to be inked, they were already 63% up on 2024, the second highest on record, and edging 0.5% higher than the recent highs of 2021. Now, retail has outperformed every other commercial sector, sitting 18% above industrial and 140% above office liquidity in Victoria. It's only the second time in this decade that has happened. Now, vibrancy in the Melbourne CBD is truly back. The vacancy now at new lows, having dropped to around 4.5%, down from its about 28% peak in 2021. But behind me is the new Mecca flagship at 299 Bourke Street, one of several new projects that's bringing this new energy back to the Melbourne CBD, alongside the recently opened Melbourne Walk and also the recently redeveloped Collins Arcade. Now, investor confidence is following suit, with transactions like 206 Bourke Street earlier this year drawing 14 competitive bids and over $900 million in underbidder capital. At the top end of the market, regional and sub-regional centres led activity. We recorded $1 billion in transactions across regional centres and over $660 million in sub-regionals, driven by major institutional groups such as Charter Hall re-entering the space at scale. Our major deals include our sales of Woodgrove Shopping Centre at $440 million and Corio Village at $146 million. In contrast, the LFR market saw lower transaction volumes, despite this being the sector experiencing the highest rental growth and the lowest vacancy rates right across the retail landscape. So this is definitely a space to watch in 2026.
Neighbourhood centre activity was slightly more subdued this year, with strong buyer demand but limited stock holding back transaction volumes. There are only 5 sales completed across Victoria, with that campaign for Bell Park Plaza being the sole on-market deal, with total volumes around 30% below the 5-year average. Pricing was robust, with yields tightening slightly and showing investors are still extremely attracted to the subsector. The real story was who's buying. Institutional capital has officially returned and back competing with private investors, accounting for almost 60% of neighbourhood acquisitions, a significant shift from previous years. Freestanding retail, on the other hand, was again hot property, with transactions dominated by a large list of private capital, vying for the handful of opportunities presented to the market. Supermarkets have been the standout performance, with our supermarket campaigns for Coles Phillip Island and Woolworths Port Arlington both achieving sub 5% yields and depth of bidding we haven't witnessed at any point in any cycle.
Offshore capital interest remains strong across our retail campaigns. Despite foreign ownership surcharges, buyers remain competitive, acquiring nearly $140 million in major retail assets this year. On balance, Asian capital has been net sellers of retail assets in 2025, with many Chinese investors recycling capital. However, our Asian markets team has seen sustained interest from Asian private investors, who continue to be able to outbid domestic competition when the opportunity is right, particularly for trophy investments or land-rich retail assets across metropolitan Melbourne.
The convenience retail and fast food sector has shown strong liquidity and record inquiry this year. Service station transactions have remained robust, with modest yield compression, but the strongest interest has clearly been in fast food assets. Transaction volumes have almost doubled, with more than $78 million in sales at an average yield of 4.2%. Our transactions of KFC Ringwood for $8 million and McDonald's Hampton Park at 2.78% yield have led this subsector and highlight just how competitive the market has become.
Brands like Aljana are a great example of the new wave of QSR operators expanding aggressively across Victoria. Their popular business models is proving very attractive to investors, and we expect to see continued strong activity in this subsector in 2026, with more and more buyers seeking secure, non-discretionary income streams backed by some of Australia's leading retail companies.
Whilst the retail sector is not immune from much of the pressures impacting broader real estate markets, retail rents are only accelerating. The population growth in Victoria is the strongest in the country. Supply remains heavily constrained, and the weight of capital for retail is only building. So the question really is, with the recovery now well behind us, will this cycle take us back to peak pricing?
We'd like to thank all of our clients for their support in 2025. We wish you and your family a happy holiday season, and we look forward to working with you in 2026.